Well, let's stay in that energy space now, especially with oil production in Nigeria recording that increase with Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company. Mr. Rwani, good morning and thank you for joining us on the program.
Good morning. Thank you for having me this morning, Ini.
Yeah, so we
Yes.
see our oil production for January is up. That's good news. Looks like perhaps the targets of the 2025 budget may be hit before the end of the year.
Yes, let me, while I didn't hear you very clearly, but let me come up with what I think, one, is the breaking news. The breaking news is that we've carried out our inflation survey, and that we can say, using the old methodology, that inflation is going to decline to 33.3% from the current 34.5. So basically, there's going to be a 1.5% decline in the rate of inflation when it comes out this weekend.
All right.
If you use the old methodology.
All right, Mr. Rwani, can you hear me now? Can you hear me?
I can hear you clearly now.
Okay, all right. I was asking about our oil production. We saw that good news of an increase in January, and I was saying that it looks like we're on track to hit the target, the 2025 target for oil production.
No, I think our oil production has gone up to 1.53 or 1.56, according to OPEC, which is a remarkable improvement, which means that one, the the amount of oil bunkering, the amount of oil leakages and vandalistic activity has reduced. So there's no question about that. That's good news. But the bad news is that we have not. Our price, budget benchmark price is based on $75. And if you look at it over the last couple of weeks, the oil price, Brent, has been slightly below $75 a barrel, which leaves us no room. The projection of production in the budget was about 2 million barrels a day. We are nowhere near that. So in terms of revenue projections, I don't think it's going to come out from oil. It's going to come out more from taxes. But as I was saying, when we had that short interruption, I was talking about oil, the inflation projections that are going to come out later after this news bulletin. We are seeing 33.36 as our projection, as against the current level of inflation, which is 34.80. So it's a 1.54 decline using the old methodology for January. This is very important because this will be the highest, the greatest drop in headline inflation for many months, which means that one, consumer resistance is kicking in. Two, that money supply saturation is reducing. Three, that the exchange rate pass-through effect is having a positive pass-through effect in the sense that the exchange rate has appreciated at least somewhat in the last 3 to 4 months. But most importantly, in this whole effect of this inflation that we are seeing is the fact that Dangote has brought down the price of diesel and brought down the price of petrol. This is very significant. Even though it reduces the producer price index more than it reduces the consumer price index. So it's important when you look at these things. But this is January, and January traditionally is a period when people have no money, people are paid school fees, people are paid their rent, and therefore they don't have money. So consumer resistance has a part to do with it. But we cannot underestimate the impact of the reduction in the price of diesel, which just happened, and the reduction in the price of petrol, which happened a few weeks ago. So that is important. But now, if we go into the prices of the commodities that we've seen, we are beginning to see another worrying trend. All of a sudden, after tomatoes have dropped sharply, we are now seeing tomatoes up again by as much as 28%. The bag of tomatoes now is about 110,000 naira. And we've seen also an increase in the price of pepper by 23% to about 52,000 naira. Rice stayed flat at 100,000 naira. So the only items that have reduced in the last week has been gari, which is down by 5%, and onions, which is down by 15%. So again, we noticed that trend in January, but now in February, we have seen price of tomatoes up, price of pepper up, and price of the bag of rice flat. And also, we are beginning to see the international effect on the price of eggs. Eggs are now going back up from 6,500 back to about 7,000 naira for 30. And this is happening also in the United States. So the good news is that January is going to show slower inflation, but the worrying news is that in February, we are going to begin to see some increases. Don't forget, Ramadan starts in 2 weeks, and that is why probably the price of tomatoes and some of these vegetables are beginning to increase. We also have seen a sharp increase in the price of beef because there's been supply logistics of beef and cows coming from the north to Lagos. So there has been sharp increase and actually scarcity of suya in the market and scarcity of the substitutes of beef, which is chicken, fish, and others, now begin to react to that.
Yeah, I guess, Mr. One, if it's any comfort, so when you talk about the price of eggs increasing, we also see the major driver of U.S. inflation, which was out yesterday, higher than expected.
Yes. Now, the U.S. inflation came out at 3% for January. That's the highest level in about 7 months. But you can imagine that, and that is why the Federal Reserve is saying that they are not in a hurry to cut rates anymore. What it means is that global inflation, you will see that global inflation is now beginning to go in the other direction. One, because of tariffs. Two, because of production costs and the trade wars between countries. But our view is that after the tariff and posturing of Trump, you would see that if there's a kind of truce between Ukraine and Russia, which we think will happen in a few weeks, then all the prices of goods, commodities that have increased because of that global supply chain logistics problems will reduce. So you would see immediately that when that happens, global inflation and commodity prices begin to come down, and there will be some era of stabilization there. So one, the shock of the tariff wars. Two, the truce in Ukraine and Russia and in Gaza brings down the price of oil, brings down global commodity prices, strengthens the dollar for a little while, and then we'll begin to see a kind of flatlining of commodity prices. However, I think you must bear in mind one thing, that the Chinese New Year just ended, and we noticed that a lot of people who were buying dollars to buy products are now buying Chinese yuan, and that has actually made the naira to appreciate somewhat. But generally speaking, we don't think the naira is flat at this point, trading at the levels that you just said. In the official market, it deteriorated. It depreciated, but in the formal market, we're seeing it trade at 1,570. That is in the parallel market, 1,570 naira a liter. Sorry, a dollar. That is where it has been. Don't forget, this thing got up to 1670, 1675 about a month ago. Now, if it has gained 100 naira in the last 1 month, it's quite significant in its inflation reduction impact. I think that's what you must bear in mind.
All right, Mr. Rani, thank you so much. Certainly be looking out for those inflation numbers we're expecting from the NBS. And I hear your hints there that it's the old methodology. We wonder what the new methodology would bring. But thank you so much, Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rani.
Thank you very much for having me.